Hey, this is Chad with eXp Realty here in Sheridan and have the housing market update for the month of September 2025. So we just ended up finishing the month of September and absolutely gorgeous. You know, a lot of beautiful days. Seemed like the leaves on the trees kind of hung around and the colors just amazing with some warm days to enjoy it and sad to see those warm days go. But no, it's been beautiful and probably enjoy it more because last year at this time we had the bad fires and so really appreciated the nice weather and beautiful colors of the fall. So a lot going on. We're going to talk about kind of where the market's at, where it's projected to go. I think it's going to be pretty exciting for everybody moving forward. So we'll jump right into the market analysis here for our area here in Sheridan. You know, some of the big numbers that we're looking at here for this month was closed sales. You know, at this time last year it was just the opposite. We were, you know, we had 44 closed the year before, and last year we were down about 10 units. This year it's flipped back up to 44 units closed, up 26%. And median prices are just kind of leveling out. We just saw 3% gross prices 3% difference in price growth from last year to this year, and we've seen that kind of across the board. And we'll kind of see that trend nationally as well. But things kind of leveled out here. You can see the days on the market's about the same as it was last year, about 42 days. And inventory has been kind of the biggest variable we've seen, with a lot more homes coming on the market, and closer to that 6.0 balanced market there. So definitely interesting, but we kind of see this leveling out here in the Sheridan market. But the factors that we'll go over here next, we expect things to get pretty busy as we close out the year and then start the new year. Okay, so mortgage rates right now, average 30-year fixed is about 6.4. So that's down from, you know, we've been high sixes to sevens. That's starting to come down pretty quickly. And like I said, we'll get into all the factors that kind of play into that. But you know, they're talking interest rates going down to where they were in the previous administration, down to threes and twos. So if that happens, we expect things to get busy here again for both buyers and sellers. So kind of moving forward here, we can see that you know, the last this year 2025, we've seen more inventory than we've seen here in the last 2 to 3 years. So, you know, more homes coming on the market. Buyers are very particular, you know, with everything being so stinking expensive and higher interest rates. Plus, you throw in kind of a lot of chaos, both home and abroad, with tariffs and all this uncertainty. A lot of homes are sitting on the market more than we've seen here since kind of the craziness of 2020. So, just kind of a good chart to kind of illustrate where we are inventory-wise across the United States. Okay, here's another great chart kind of showing you the price cuts across the country. So, you know, the hard part for an agent is making sure we try to get, you know, especially the listings priced right. And, you know, so we got to go where the market's going, you know, set those prices, not where the market's at. So trying to get that communicated to sellers of, hey, you know, this is where we're at. It's not quite as crazy as it was. So what we're seeing is a lot of homes are priced way too high, and you're starting to see a lot of major price drops across the country. So it's not necessarily that home prices are dropping, like we saw that 3% appreciation. It's just that, you know, it's part of our job is to make sure that we're staying ahead of the curve. Where's the market going to be? So we can kind of set those prices right, so we're not seeing a lot of those price drops. But as you can see across the country, a lot of price drops, you know, kind of coming from the craziness and trying to keep up with the market and make sure that prices are reflecting kind of where the market's going. Okay, and again, so home prices, you know, again, it hasn't totally stopped or gone negative. It's just kind of very slowed at a very, you know, moderate pace here, as we see about 2.3% for this is year over year appreciation, and we saw with our chart here in our area, it was about 3%. So pretty consistent, but like I said, if interest rates kind of trend to where they're going, we expect that to pick up. We'll see some national numbers on that as well. Okay, so a lot of the major indicators for the lowering of the 30-year fixed mortgage rate kind of depends on, unemployment. And as of right now, the numbers that we got, unemployment's been pretty steady there with a 4.3% increase. I know with the government shutdowns right now, they don't have access to that data, but it's looking like a lot of factors are going to be helping get that number as low as possible, and getting that interest rate down low. But as of right now, unemployment's been kind of steady with that adjusted rate, and we'll keep an eye on that, and that definitely affects the interest rate and the health of the market. Okay, and I can tell you this has been one of the biggest factors here in the Sheridan market. Is 70% of Americans admit that world news or current events affects their financial decisions. And man, with all the major events, with the Iran's nuclear facilities being bombed in the summer, the incident with Charlie Kirk, tariffs, the government shutdown, turmoil in the Middle East, all those major factors. It seems like every time we have a major event, everything here just absolutely stops. And so it's been kind of a stop and go market with all these major events. So been kind of an interesting dynamic, but we're hoping that as things kind of calm down and get leveled out, with all those different factors, people get more comfortable, and we don't quite see those stop and go reactions to the market. But that's definitely been one of the big factors here in the Sheridan area, both for buyers and sellers. Okay, so here's where the 30-year fixed mortgage rates projections are going based on the industry leaders. I know a lot of them, kind of want to be modest in their projections. Don't want to get too excited, kind of under deliver and then hope for the best, being surprised. So, but as you can see there, they're kind of looking for low sixes, but I think there's a good chance with everything that's going on that it could be, they're going to be 2 more cuts by the feds before the end of the year. And so going into the first of the year, we expect things to start dropping pretty steadily with the interest rates. So there's a good chance that it could be high fives to mid to low fives moving into the new year. So I know that's what everybody's kind of waiting for. Like I said, if that's kind of what both buyers and sellers are waiting for, because the affordability of wanting to get into something a little bit bigger, or first-time home buyers. I mean, pretty much everybody's situation is waiting. With everything being so stinking expensive, trying to wait for this, timing this thing, and when that happens, we expect the market to kind of get pretty busy and steady again here. Okay, so here's kind of a 50-year look at the 30-year fixed mortgage rate along with the 10-year Treasury yield. So I mean, it's basically mirrored. And so that's another indicator of keeping an eye on the interest rates. But we can see that trend is pretty solid and consistent. But another variable that kind of ties into where we think the interest rates are going. Okay, so this is kind of another interesting chart. This shows you there's a gap between what the 10-year Treasury is and what the 30-year fixed mortgage rate, and that gap is usually the uncertainty in the market. And as you can see back in 2023, kind of with all the uncertainty of things, with the elections coming up and all the uncertainty how that was going to go, you have a wider spread. And then now with kind of things settling down, getting into the new year with all the different changes, that shrunk a little bit there. So again, that kind of ties into the overall mortgage rate and how they set them, and we'll kind of get into that here next. But just kind of an interesting dynamic of uncertainty and how that plays in with the 30-year fixed mortgage rate and the 10-year Treasury yield. Okay, so this is how the mortgage rates are actually set. So you have your 10-year Treasury yield, that spread difference between the 30-year fixed mortgage and the Treasury yield, that combined gives you about the 30-year fixed mortgage rate. So you can kind of see how that all ties together, and as the employment and all those factors play in, those will be the types of variables that affect the 30-year fixed mortgage rate going forward. Okay, so this just kind of gives you an example, seeing the different rates and how that affects. So as we get more comfortable with everything, things get lined out, the government shutdowns, tariffs, they just they're going to be allowing some of the drilling for both natural gas and oil in Alaska, bringing down all the day-to-day cost of living, bringing that down, along with the interest rates and that, you're going to get more certainty. That's going to play in. So again, we're hoping mortgage rates are high fives to mid to low fives, and hopefully that trend continues, and that's definitely what everybody's looking for. Okay, so this is just a great chart to kind of show you in that red line limited, where we've been with those mortgage rates of 6.5% to 7%. I mean, most buyers and sellers are in that category where it's limited. Like, we are not making a move. We can't financially upgrade, downsize, buying a home. Everybody's just waiting. But as those interest rates start to trend down, you can see that the buyer demand will start to get more heavy and heavy on that side of it, and things will definitely get more active. But that's kind of been the stalemate, for most people, has been in that 6.5% to 7% rate range. Okay, so then looking forward, what are home prices going to do? So for the most part, I mean, you have the highest expectations of 25% growth, with the most pessimistic being at 4.9%, with an average of 15%. So those are pretty high projections on where prices are going, especially if the interest rate starts to trend down, and those are kind of the main projections from all the leading industry players. So don't expect, overall prices to go down, especially here. Some of those bigger markets, it's been kind of a big hit with Arizona, parts of Nevada, Vegas, parts of California, some of those back east places too, and then like Florida has seen kind of a big slowdown. But here there's still a lot of demand. Everybody just kind of waiting, like I said, for those interest rates and cost of living to kind of get down a little bit before they make a move. So those are projections, and looking good for home appreciation moving forward. Okay, just kind of wrap things up. When I send these newsletters out, be sure to check out the homes sold, both under 500,000 and over 500,000. Kind of keep an eye on maybe the price range that you're in, or the price range that your house might be in. Kind of keep an eye on the market. If you don't have the newsletter, you can go to my website, conleyagent.com, and get signed up there, and I try to send these out monthly. Just try to get you all the information possible so that you guys can make the best decision. Homes and properties are people's biggest investments, so I just want to keep you up to date as best we can here, especially for the Sheridan area. If you ever want instant home valuation, just get a kind of general idea, got a link for that. If you ever want a full equity home valuation, I can put that together for you, which I can pull 6 months of the last home sold here to kind of give you a good estimate on what the estimated market value is. And then every quarter or so, we try to send out these fall, these guides for the season that we're in. So we just got the fall buyer and seller guides packed with a bunch of great information, especially keeping up to date with all the stuff and all the factors to consider for both buyers and sellers. And if you want to make it a little easier to check out the homes here on the Sheridan area, you can download the Closely app from my website app, and it makes it super easy to kind of browse through and filter the different types of homes and your search criteria, what you're looking for. So that's pretty helpful there. Okay, so closing out here, we just got a few tips. I say the biggest tips for the sellers right now is kind of like what we talked about earlier, is setting that price right. And we try to give you the best market indicators. Not where the market is and where it's been, but where it's kind of going. So, trying to have those conversations to where we can set the price of your home right. So, it's not sitting on the market a long time and you have lots of price drops. So, yeah, getting your home's price right. The three factors that affect the selling of your home is going to be the price, the location, and the condition. So a lot of times you can't do much about the location, but if we can get the home in the best condition possible, set it as close to market value as possible, it's going to be the best way for you to net the most money that you can. Okay, and moving forward with tips for the buyers, one of the big kind of factors that we've seen here the last couple months is trying to set realistic expectations for buyers when asking for repairs. So, your first round of negotiations with price with the sellers, and then your second round of negotiations with the price of the home is with the repairs. So we always try to focus on, the repairs that need to be done that mostly affect, health and safety issues. I would say on average, most sellers' threshold on repairs on a dollar amount is about on average $10,000. It can be a little bit more, a little less. And there can be exceptions like a roof where, a roof needs to be replaced. That could be up to maybe say $15,000-$20,000 or more. But that can usually be taken care of with insurance, whether it's hail damage or whatever it might be. But, just setting those realistic expectations of not asking for, everything to be fixed, and where, you get a seller just saying, no, we're not going to cover all of that. We'll be willing to cover, up to this. But so just trying to find that happy balance between, what's fair, what's reasonable, try to help you walk you through that, but just have the realistic expectations of, not asking for so many repairs that the seller just gets overwhelmed and says, we're not gonna do that. So asking for health and safety issues first, and just prioritizing. Everybody's different. Everybody has things that are most important to them, but just kind of prioritizing those, and then putting a game plan together so the hardest part of the second round of negotiations is getting through the inspection. So helping you get through that, being realistic, and helping you prioritize will be a big tip, helping you to get past that and get your home closed. Okay, so again, thanks for everything. I hope all that information is helpful. I think a lot of good things are happening as things kind of get lined out with both everything home and abroad, and economy kind of settles down. I think a lot of good things are going to be happening. Interest rates are trending down. Affordability of everything, I think, is going to start to get better. So it's going to be kind of exciting. Moving in, closing out this year. We've got the holidays coming up. For a lot of us, it's hunting season. It's always a good time to get out and enjoy the land. So I'm super excited about everything. And if you're a buyer or seller, things are going to be starting to pick up, and be a great time to make a move and to be prepared and ready for everything. So thanks again. Feel free to reach out. If I can help in any way, please let me know, and we'll catch you on the next one. Take care.